Hey guys, this is Tanner Invest here. Thanks for tuning in. Today we have an exciting video because the latest chairman's message from BMNR has been a doozy. I mean, there's a lot of great information in this. We have more info on MAVAN for their staking yield. We have an update on their cash pile, which has just gone through the roof. We have an update on their ETH holdings, of course. They actually bought more this week than they have in a long time. Also, they mentioned that they're using a outside investor advisor as a consultant. And so I'm going to get into who that is and why it's pretty important for us. And so, yeah, that's it. It's been a great week for ETH. We're up 9% and BMNR is up over 20%. So, first, ETH price up 8%, BMNR up 20%. Real quick, I just want to compare this to SBET because over the past week, SBET's up only 10%. And so in my last video, you guys might have seen, I've been getting a lot of people ask me, hey, Tanner, are you still in SBET? Are you still buying SBET? And I told you, no, I'm not. I'm buying BMNR. And the reason why is because I feel like there's more of a violent upside potential with BMNR, because not only has ETH, brought the price down to BMNR, we've also seen the MNAV contract to right at around 1.0. And I feel like when ETH goes up, which I'm very confident it will go up, not financial advice, but if ETH goes up, I think it'll be like a coiled spring. Like we're just going to unload a spring. The BMNR's MNAV will also rise and we'll see really heavy price action. And that's exactly what we saw this week. So I'm glad that's coming into fruition. And it's funny because a lot of people out there, you guys bought in the 40s, you bought in the 50s. Some people bought in the 60s. I was holding off in the 60s, thankfully. But my average price on BMNR right now is $41. So I'm almost at my average. And the reason why is because I was buying in the 30s. I was buying in the 20s. Like we talked about in the last couple of videos, these prices are getting dropped down. But are you just going to sit there and buy at all-time highs? Or if you really have conviction in something, are you going to buy the dips too? And so I've been buying the dips. And it's paid off because my average has gone down significantly. Hopefully yours has too if you're in this play. So let's go ahead and hop into this because here are the big key takeaways is that over the past month, we can see in November, they were buying less and less and less ETH a little bit. We had 1 week where we only bought 54,000 tokens. Now in December, we see that ramp up quite significantly. And over the past couple weeks, it's been up, up, and up. And so what I really wanted to point out was some people see these and they just make videos, and I've watched a couple of people's videos and they're like, wow, they're going up and why? But then they're like, oh, but they're holding cash. Like, why are they holding cash? Well, if you want to figure this information out, in my opinion, the best way to do it is to listen and read the chairman's message from Tom Lee that he comes out with. So 2 days ago, he actually came out with the chairman's message, talked about everything. And one thing that I actually want to play with his sound is he talks about this guy named Tom DeMark. Tom DeMark is the guy behind the DeMark indicators, which are a set of technical indicators that are apparently out of this world. Tom Lee, it sounds like he has a ton of respect for this guy. And Tom DeMark only has 2 clients, one of which now is BMNR. The other, I did some research, and I think it's Point72 Asset Management Company, a hedge fund by Stephen Cohen. I think that's pretty cool. But his BMNR is now a full-on, they're paying him, and Tom Lee, I'll let you hear here, in his own words, a lot of money. He's apparently pretty expensive. And so let's go ahead and hear this real quick because I think it's pretty important.
At Fundstrat, I've used him to call 2 of the major market lows, the March 2020 low and the April tariff lows. Those were all in coordination and consultation with Tom DeMark. And Tom only has 2 clients today. We're his second client. And he's very expensive, actually. Tom has advised us to dramatically slow our Ethereum purchases. And as you can see here, once we engaged Tom, we took a different strategy with regard to our Ethereum purchasing. And you can see our Ethereum purchases fell by half to 50,000 a week. But we've begun to buy Ethereum again. You can see last week we bought almost 100,000 ETH, twice what we did 2 weeks before. And I will give you a hint, we definitely bought more than that this week because we believe Ethereum prices have actually bottomed. So we're bullish on Ethereum.
All right, so that was pretty cool to hear. So Tom DeMark, I did a little bit more research. He apparently really famous for the DeMark indicators. Also he's a CEO of his own company, DeMark Analytics. If you guys want, I'll leave this in the description. I'm not going to go through his entire bio, but it sounds like Tom Lee has a lot of respect for this guy. He helped him time a couple bottoms, and it sounds like there's, Tom's gone on CNBC on interviews saying that the bottom's in, and maybe Tom DeMark is the one telling him, hey, the bottom's in. And so it's nice to be able to have someone that's, proven themselves in BMNR's court. I think that's amazing. And so 0.72, Stephen Cohen, this is, I think, the other client, because I asked AI, of course, like Tom Lee said he has 2 clients. BMNR is one, who is the other? And they kept pointing me to 0.72 Asset Management. And these guys have an incredible performance as a hedge fund. So that's cool to see as well. And then I also wanted to just hop into a couple things that Tom Lee has been talking about. So in his chairman's message, obviously he's been talking about that ETH to Bitcoin ratio. And he still said within the next few months, he thinks that Bitcoin will get 250,000. Now, a lot of people think that's crazy. I think it's kind of crazy. But we have a lot of catalysts out there, like this Clarity Act. If that really does just bring so much institutional buying and into Ethereum and cryptocurrency in general, that would be massive. But he's mentioning that, okay, if we hit 250,000 and the ETH to Bitcoin ratio rises, which it has been rising, let's go ahead and show you right here. So we can see that over the past month or so in November, we've seen a pretty dramatic move where we actually have had an increase in that rate, which is just the price of Ethereum compared to the price of Bitcoin. And so this week in general, I mean, the big move on Ethereum, and I think today we're a little down, but Ethereum is still holding its own, and Bitcoin is going down a bit further. So we're just seeing over time potentially an increase in that ratio. And if that happens, we all know the 8-year average, if we're at $250,000 Bitcoin price, that would put ETH at around $12,000. And then if we have the 2021 high, we'd be at 21.8 thousand. So, and then he thinks, okay, if ETH is the future of payment rails, he believes that this ratio could get to a quarter of the price of Bitcoin. So that's the total market capitalization, of course. And that would put ETH at 62,500. And in Tom Lee's own words, he said he feels like ETH is grossly undervalued right now, grossly undervalued. So you can take what you want with that. One thing too is a new, I always like to follow Tom Lee's, like in interviews, what he's saying and his overall thesis. And right now he's actually comparing the L2 strategy of Ethereum similar to Facebook in 2007. So what he's saying is people are complaining that, hey, when people use L2s, there's very little revenue going to the Ethereum network. So it's not driving any value toward ETH. And he's saying, well, what happened? What about Facebook in 2007 when they were just trying to acquire as many people on their platform as possible, even though they weren't getting much revenue from those clients? You can always monetize later. You can always come up with strategies later to make it valuable. And he's saying that that's what Ethereum's doing today. They're just trying to take advantage and get as much stable coins and tokenizations, because tokenization, he said, is the year of 2026. And if tokenization is the year of 2026, he thinks that will just greatly increase the value of Ethereum. And then that would greatly increase this Bitcoin, ETH to Bitcoin ratio. So very exciting stuff. On this chairman's message, I'll link this below as well. He talked about the 4-year cycle, doubled down on why he thinks it's over, talking about the 1971 moment, the Fusaka upgrades, all these things where ETH will become the future of payments. And then it talks about the ratio, tokenization, and how that's great. We talked about in our last BMNR video, product tokenization, and how with just tokenization in general, whether it's through Ethereum or not, you can do things like you can invest in Tesla, but only invest in a certain part of Tesla, right? Or you can invest in Google, but just invest in Waymo and not the rest of the platform if you wanted to. That would be pretty cool. And then digital asset treasuries, we are trading very, very liquid still. But the only other thing I really wanted to highlight in this chairman's message is he gave us more details on MAVAN, which is the Made in America Validator Network. And so we'll see here. He mentions there's a 2.9% yield will come from MAVAN. So that's a lot lower than a lot of people were expecting. 3 to 4% was like what I was expecting, maybe in the low threes. But, I think for one, Tom Lee might be like potentially sandbagging, or they're just really trying to ensure they have the like lowest, the best risk adjusted return possible, which we've talked about in the past. And I know that's something that SharpLink actually talks a lot about. So Joe Chalem, the CEO, always talks about how DeFi participants chase high yields, but they don't really account for risk. And so when you have this much ETH on the balance sheet, you want to make sure you're not risking that. And so I want to play this 54-second clip here from Joe Chalem just to help understand risk adjusted yield versus just chasing the highest yield.
What we're focused on is DeFi who understand that with the higher return comes higher risk, meaning there's a yield component, but there's a risk component. And to date, most people participating in DeFi only focused on the yields. I can get 15% yields, 20% yields, and forget that the other side of that is you're taking more risk. So what we're doing as institutional stewards is looking at every risk innate or inherent in a protocol or a DeFi security layer, from smart contract risk to depegging risk to liquidity risk to capacity risk to bridging risk, to Oracle risk. And I think the DeFi community is waking up and saying, wait, I'd love to be able to meet these standards and get hundreds of millions or even billions of dollars of permanent capital into my protocol. And that's what I think is exciting. What we're focused on is.
All right, so you can understand from that video that risk-adjusted returns are super important. It's just like why a company might say, hey, I'm going to invest in bonds instead of investing all my money in the stock market, because you have a way lower or a better risk-adjusted return, right? You know that you're going to get that 3% and your cash isn't going to go anywhere. That's why banks can do that, and they're not going to throw their money into the stock market, right? So that being said, guys, I think that's the most of it. There are some really cool things. I'd recommend following Tom Lee on X, because he likes to retweet, and he's very transparent. He's very active on X, actually. And, crypto prices have bottomed. The best years are still ahead. This is, he thinks there's a 200 times adoption to come. And so, man, there's just so many ways to be bullish on this right now, guys. The only other things I wanted to say was Robinhood actually came out with some interesting an interview from one of their guys that are involved in the Robinhood chain project. So bringing tokenization to Robinhood and all that. And they were actually talking about Ethereum and why they chose Ethereum. And essentially they said, one, because it's the most secure network, and it lowers their cost. Because if they were to build their own chain, there'd be a lot of costs with that. And then also liquidity, like having all that liquidity on Ethereum is super, super important. So it's great to see other people kind of buying into the same things we've been talking about on these videos for months now about the importance of Ethereum. Now, another, I guess, negative thing about Ethereum in general, not, I want to say super negative, but SoFi Technology, the bank SoFi, actually announced that they're actually using Solana for their SoFi stablecoin. So that's okay, because not everybody's going to choose Ethereum, just like we talked about in the past, Visa, MasterCard, Discover, not everybody chose Visa, right? So I do think that right now, Ethereum is winning on tokenization and stablecoin technology. They're in the winner right now, but there is still some risk. But this is a huge market, and there can be multiple winners. Okay, and the last thing I wanted to get into was that cash pile we talked about. So they're at 1 billion in cash. If they really think we're at the bottom, why wouldn't they just spend all that on Ethereum? A lot of people are saying that. I think the reason why is because they actually are trying to do more things than just buy ETH. The alchemy of 5% obviously is the main goal, but that will be accomplished at some point. The other things they're trying to do, we talked about in a video a couple videos ago, they hired a new CEO of BMNR, and the CEO has a ton of M&A experience. And I think Tom Lee's vision for the CEO in particular is the fact that he might be able to help with the Moonshot project, right? So, and opening of BitMine Labs, right? So investing in different DeFi projects is where that CEO really, that's where his strengths lie. Like, he's not the most crypto heavy, like learning about staking. That's why they're using their other teams are relying on a lot of their like mosaics, Tom says, and some other people as well for that side of things. But for moonshots in particular, that's maybe why they're holding cash. I mean, it's hard to say exactly why. I think there will be some pretty intense buying over the next couple weeks, obviously, of ETH. But potentially we might see some more moonshot investments. And I think in the future, it's not just going to be like new DATs, like Orbs with Dan Ives. That was cool and all. You know, they invested a lot into that. But I think that the long-term goal is to invest in DeFi projects. So imagine if they were kind of like almost like the NVIDIA of Ethereum, where they can have their hands in all kinds of cookie jars and they have a portion of that business. You know, we can see it too with like Microsoft. Microsoft's valuation has gone up a lot because they have such a huge stake in OpenAI, right? And we're seeing that from NVIDIA in multiple partnerships with CoreWeave, Applied Digital, and so many more. So I think it's pretty interesting, guys. I'm super bullish, super bullish 2026. I mean, yes, the 4-year cycle is the only like worry out there, but I don't think the markets work that way. I don't think we work in just 4-year cycles, especially with the way the landscape of crypto has changed. I'm kind of in the same boat, and I have been for a while prior to Tomly even saying the 4-year cycles, that I think I have some videos where I was saying it. So that's it, guys. Appreciate your time today. If you guys are interested, please leave me a subscription. I'm getting close to 5,000. So if you are the 5,000th subscriber, please let me know. That would be pretty cool. Thank you, guys. Bye.